Welcome back to Firmer Ground from SRM, where we explore trends and strategies impacting the current and future state of financial institutions in North America and across the globe. This is Neil Doherty, host of today's podcast and Managing Director of Global Marketing at SRM. Every episode features perspectives from the world of banking and financial services, including thought leaders here at SRM, executives at future-thinking financial institutions, and other experts from all corners of the industry. In this episode, I speak with the former chairman and current board member of the National Credit Union Administration, Rodney E. Hood. Mr. Hood has enjoyed a diverse career in financial services and government, with a focus on innovation and financial inclusion. He's kept a busy schedule this summer, appearing as a featured speaker at several industry conferences. And he was recently named board chair of NeighborWorks America, a nonpartisan nonprofit entity focused on achieving home ownership and financial strength in historically underserved communities. We hope you enjoy this conversation with Rodney Hood. All right. Well, hi, everyone. Neil Doherty here, Managing Director of Global Marketing at SRM. And my guest in the studio today is none other than Rodney E. Hood. And Rodney is the 11th chairman of the National Credit Union Administration. He served from 2019 to 2021 in that role, and now an NCUA board member and a continuous advocate for industry innovation, for financial inclusion. So we're really excited to have Rodney on the show today. He's previously appeared as a featured expert in the Wall Street Journal, Fox Business, American Banker, and many other industry outlets. So I'm excited to have him here on the SRM Firmer Ground podcast. And I just wanted to welcome you, Rodney, and say thanks so much for joining us. How are you today?
Doing great, Neil, and thank you for the kind invitation. I'm delighted to join you.
Thank you so much. I know it's been a little while in the making, so I'm excited to have you here. And I know you've been a busy man this summer, so it seems like you've had quite a whirlwind conference tour this summer. So I'm just curious, any highlights from your travels, any, places or topics that are really kind of near and dear to you at this point from your travel this summer?
Yes, Neil, it has been a pretty busy summer, and I have to say that unlike many other institutions, credit unions, they want to hear from their regulators and they want to hear from us often. And what I've been doing is I've been pretty much going across the country, meeting with credit unions to talk about what are some of the regulatory impediments that have been preventing them from perhaps achieving success, and what are we doing at NCUA to give them the regulatory empowerment and freedom that they need to serve their members. A lot of the meetings that I've been going to, I'm talking about the overall safety and soundness of our credit union system. We've had a number of headwinds in the industry that you probably have heard about: inflationary pressures, geopolitical risk, what's going on with some of the matters concerning banks, such as Silicon Valley Bank and Signature Bank. And a lot of the headwinds have caused a lot of consternation for credit unions. So I'm letting them know that we've seen no contagion from any of those activities in our system. And in fact, Neil, I'm letting our folks know that credit unions now are stronger than they've been. They have stronger capital. Capital now is about 10.5% collectively, and we consider a credit union well capitalized at 7%. So they have strong capital, they have strong liquidity, they are serving their members. Credit unions now serve 137 million members throughout the United States.
Wow.
Assets approximate 2.2 trillion. But Neil, you know the number that I talk about often when I go to these meetings? I'm proud of the asset growth, but I'm even prouder of the $1.7 trillion in loans outstanding, because that means the credit unions are making loans for members to buy mortgages for their families and to have sustainable home ownership. They're getting those cars that individuals need to get to and from work. And they're helping those small Main Street businesses have access to capital. So it's a very strong system, and I enjoy having dialogue with the credit unions around the country just to illustrate what they're doing, but also to let them know how I can work with them in partnership. Again, it's around safety and soundness.
Yeah, and that's fantastic. And I want to revisit a few of those topics, especially as it relates to the affordable housing piece and the fact that obviously credit unions are, still, making the right commitments to Main Street America, right, and managing their processes. And I think there's some really great stuff to touch on there. But I have to ask you, you have such an interesting background, a really neat career trajectory. Excuse me. Did you ever think you'd end up serving as a board member and even the chairman of a government agency like the NCUA? Talk to me a little bit about that.
That's a really good question there. And Neil, of course, that would be a resounding no. I started my career, I went to school in North Carolina. As you know, I'm from Charlotte originally. I went to school at UNC Chapel Hill.
Go
Doing
Heels, right?
my Go Hills, yes. And hey, Neil, it was during those collegiate days that I thought I was going to become an accountant. So I had an internship all during my summers, working at Arthur Andersen. Many people may have heard of that particular accounting firm. When it came time to graduate from UNC, I had a number of banking offers, career opportunities in financial services. But I did take a slight diversion where I was a missionary in Africa. I lived in Zambia where I did a short-term missionary assignment, thinking perhaps that I would become a priest of some sort. But while I didn't quite get that midnight call calling me into the ministry,
Hmm.
I still wanted to do things that allow me to help people. So a priest once told me that I don't need to wear the clerical collar to help people. So I went into financial services. So for almost 30 years now, I've worked in banking roles with maybe some of the largest Wall Street companies, but in so doing, I've done work around affordable housing, economic development, community renewal. I was a Community Reinvestment Act officer. So, though I didn't go into the ministry, a lot of the work that I've done in financial services has allowed me to serve underserved, marginalized communities. So that's why when you ask me about my commitment to affordable housing and some of the other things you've heard me do, it is because my North Star is around making a difference, empowering communities. And as the scriptures call us to do, we're called to help the least amongst us. Well, I'm fortunate that I've either been able to work on Wall Street with firms or now as a financial regulator of a system that serves 137 million people by helping empower the 4,800 credit unions and serving those of modest means. And that's why I love the work that I do. But as you can hear, it was a pretty circuitous route in getting me from thinking I was going to be an accountant, then maybe thinking about the priesthood to now
Right.
being someone who's worked in financial services, but in those roles that, again, empowering communities and empowering individuals around financial inclusion.
Yeah, and thank you for recapping that for us. I think it's such a unique story. And congrats, of course, on your, just kind of touching on one of the things you just mentioned around affordable housing, and that. And what's awesome, obviously, about that too, is that a lot of what you've done aligns with a lot of what the typical mission of a credit union would be, right? In terms of the work in the community. But I have to congratulate you, of course, on the appointment as the board chair for NeighborWorks America. And I'm curious, how did that come about? I mean, obviously, you were I think you've been involved there for a bit, and in your NCUA role. I'm curious how it worked out that you would ultimately take that chairmanship.
That's a really good question. Neil, I was honored. I was on the NeighborWorks board when I was last at NCUA. As you may know, this is my second time serving on the NCUA board. You mentioned in that introduction that yes, I've served as chairman and now board member, but 2005 to 9, I was vice chairman. So I was on the
Right.
NeighborWorks America board then. And then all during the time that I've worked with Wall Street firms doing community and economic development, I worked with NeighborWorks then, of course, not as a board member, but as a private sector partnership perspective. So
Hmm.
I've worked with them for quite some time. I'm honored to now be the chairman of the board, and we are a quasi government entity. NeighborWorks is chartered by Congress to stimulate and promote economic development, notably through affordable housing, either on the rental side or the home ownership side. Uh, they are working now in all 50 states. And I serve on that board along with other financial regulators. So joining me on the board of NeighborWorks America, in fact, we're going to be meeting later today. We have the chairman of the FDIC. We have the deputy comptroller of the OCC. That's the Office of the Comptroller of Currency. They oversee America's largest banks. We have a representative from the Federal Reserve, one of their board members, and we also have the deputy secretary of HUD. So we are a small board in terms of board members, but really big in terms of our ability and desire to really make an impact around economic development. So NeighborWorks, I am excited about the group. As you now know, given some of the inflationary pressures we're seeing now, it has made home ownership really, I
Right.
would say, unattainable for many communities. So that's why we are delighted that NeighborWorks is there to be that intermediary around helping find loan dollars, down payment assistance dollars, opportunities for interest rate buy down. So it's a wonderful organization, and I am delighted to work in that policy making role for them.
Yeah, that's fantastic, and it sounds like you have quite the resume in terms of folks on that board and the sort of well-rounded experience that's needed to tackle some of these challenges. And I guess that's a good segue, and obviously that's what the board's working on. But the segue into just thinking and maybe sharing your thoughts on how you feel that leaders in the financial services industry, can participate in this process, can support that initiative, can, work towards making housing more affordable, especially in these challenging environments where, lending is tight and inflation is, has, we saw some data today saying that things are starting to level off a little bit, but we've still been in quite an inflationary environment for some time. I'm just kind of curious how you feel that, the leadership levels of financial services, financial institutions should be participating in this process.
Well, that's a good question. You're right. I saw some of that same data that you are referencing, Neil, about some of the inflationary pressures not being as pronounced as we thought they once were going to be. But nonetheless, the interest rates are still rising. And in fact, just as I'm reading about inflation not being as pronounced, I also am reading that 30-year mortgage rates may rise as high as 8% over the next few weeks. So that is still a concern. And as you know, with each increase, it typically prices out anywhere from 100,000 or so folks out of the market. To get to your question, I think if anything needs to be done, it's around public-private partnerships. You mentioned earlier all the traveling that I've been doing around meeting with credit unions and convening town halls. And what we failed to mention, Neil, is that I also visit some of those local NeighborWorks affiliates. So recently I was able to visit with the affiliates there in Manchester, New Hampshire, also in Burlington, Vermont, in New Orleans, Louisiana. And what we're hearing is that groups like NeighborWorks are partnering with banks and credit unions around homebuyer education. So even though folks may not be able to get that mortgage of their dreams today, they are still going through the training, giving them that certification process. So
Right.
when they are ready to buy and when there is a good interest rate environment, you will have a mortgage ready person able to get either that mortgage from a credit union or a bank. And I don't pit banks against credit unions. I think a rising tide lifts all boats. And NeighborWorks wants to be that, again, that intermediary. Some of the things that we're seeing, though, that to really make homeownership more affordable. I talked to a credit union in Boston. They serve firefighters. They have made a 40-year mortgage product where they are going to use their own balance sheet to make it more affordable for their firefighters to live near and where they work. We have credit unions that are, again, getting some interest rate buy down opportunities with some of the local nonprofits vis-a-vis foundations.
Right.
So if there's anything that I would say, public-private partnerships are the way to go because they bring great ideas. They bring people who are collaborative. And again, I take this issue seriously because in low wealth, low to moderate income communities, home ownership is oftentimes that fundamental building block to wealth accumulation and asset building. Many of these individuals, when they get that big asset, such as a mortgage, they may, in some instances, may or may not have a 401k or any equities or involvement in the stock market. So again, home ownership is that building block, again, in underserved, marginalized communities. So we certainly want to encourage it and foster it. And I must tell you, serving on the board of NeighborWorks, again, we represent mostly all of the financial services arena participants, and they're all committed to banks and credit unions working to make resources available. And of course, we want to make sure they're doing it safely and soundly. We want to make sure that we are doing it prudently. If there's anything that we learned from the Great Recession was that perhaps there was such a speed and race to get folks in home ownership that there wasn't that necessary training and
Right.
development. So we really focus on homebuyer education and readiness as opposed to just granting the mortgage.
Yeah, that's really interesting in terms of the readiness aspect, and as you mentioned, the fact that while some folks might not be ready just right at this moment today, that there's a sort of a training process, and there's almost a goal setting that's happening there, to get folks where they need to be, and at the same time, obviously, the institutions themselves thinking more creatively around what they can offer, like the firefighters example. And you brought up something that's really interesting, and I think a challenge in today's just general kind of employment environment, which is the idea of living near where you work and being able to afford to live near where you work. And especially I think for people that work in the service industry, right, that's one of the biggest challenges there as well. So a lot of interesting stuff coming out of that. So we've covered some of the affordable housing stuff and your role with NeighborWorks, which is awesome. Want to maybe just turn the page a little bit and kind of transition over to the idea around innovation and sort of future proofing credit unions, because my understanding is that you've had a lot of conversations around that this summer as well. Is that fair to say?
That is fair to say, Neil.
Yeah.
When I talk about some of the issues facing credit unions, I talk about how strongly positioned they are amid the headwinds. They still have strong capital and liquidity.
Mhm.
But I also talk about my desire to provide them with more opportunities to embrace financial technology. Neil, I know it sounds somewhat counterintuitive. I know we often hear about fintechs as being these disruptive influences that are preventing banks and credit unions from service. And I take a differing view. I believe that fintech is integral to the ongoing success of the credit union system. I say that because those 137 million members that we now serve in our credit union system, they want data aggregation, they want faster payments, they want to be able to go into a branch and get that car loan in maybe 60 seconds as opposed to, I don't know, 60 hours, whatever the case
Right.
may be. Technology can really help our credit unions serve their members, but it can also help them really use the technology to really be 21st century institutions. What I mean by that, it means, how do you expedite the loan decisioning process? You hear me often talk about financial inclusion as a civil rights issue. What do you do, though, for the 26 million people in our society who are credit invisible, or the 40% of American households who, according to the FDIC, are unable to obtain $400 in the event of emergency? Where if you want to really bring those folks into the mainstream economy, technology can do that. So every week, we at NCUA are meeting with different fintechs to learn more about what they're doing. And we're doing that because, Neil, you may have heard this. I was able to work with my fellow board members and colleagues here at NCUA to create a new office of financial technology. So we have a new office of financial innovation that is going to be spearheading and galvanizing efforts around technology coming to the credit unions. We already have worked with some of the providers again around data aggregation, faster payments, what's going on around the appraisal process, and how do we expedite that. And what we're seeing is credit unions are embracing the tools, especially around digital identity. We, in fact, just chartered a new credit union. They're going to be a completely digital credit union. This is a minority serving institution from a sorority of African American women by the name of Alpha Kappa Alpha, AKA, and their credit union is members only. So they are using the technology. We hired our new head of our Office of Innovation. He comes to us tested and ready for success, having been the state regulator of banks and credit unions in Kentucky, having also done some financial technology work with the Federal Reserve and the FDIC. So I'm bullish about the role that fintech can play. And Neil, you need to hear this. I'm not just chasing a shiny toy because that's what all the cool kids are doing around technology. I'm doing this because our industry needs to know that their regulator is empowering them to use the tools that will bring about their success. I look at, if credit unions don't adopt some of this new technology, will we even have a credit union system to regulate? I look at this being that important, not to be alarmist, but I am sort of realistic that people, if they don't get to use these tools, then they're going to flee because, Neil, credit unions are member based and member driven. So credit unions, if you're not providing them the member services that they want, well, they're just going to either go to another credit union or to another financial services provider. But needless to say, our fintech office is open. I want them to do some Shark Tank events in the future. That means that we will be getting some of the fintechs together by theme to have them do a Shark Tank. And because, Neil, I don't know if I mentioned, there are about $800 million in venture capital dollars that have been deployed to help credit unions build partnership opportunities with fintechs. That some of that is through a credit union fund called, I think it's the Circle Fund, and then we have another group, CUNA Mutual, now called TrueStage. They're using their balance sheet to bring venture capital to fintechs and credit unions. So the opportunities are ripe, and I'm just happy to catalyze it.
Well, you covered a lot of the points that I was curious about in that piece. So thank you. I mean, I think that's really exciting. I think there's a lot of interesting themes in what you just shared. Both the fact that as the government agency, you're actually encouraging these relationships and trying to make this happen. That there's funding there. That this is going to be critical to the future of credit unions. And one of the things I'm just kind of maybe pivoting off of what you said, but one of the things that's interesting to me when we talk about the future of credit unions as well is the challenges of attracting younger members, younger workers into the credit union fold. And I'm just curious, when you think about it, when you're talking to, all of your contacts in the industry, you know, obviously the fintech piece and, managing expectations when it comes to technology is part of it. But are there other keys to kind of making that happen in terms of attracting younger members, attracting, younger workers and younger employees?
Hey, Neil, that's a really good question. When I mentioned that 137 million members of credit unions to date, that's roughly a third of the American public has a credit union account or relationship. Now, I'm not saying that that's their sole relationship, but it means that at least a third of them have at least a relationship or an account or a credit card with a credit union. 6 million of those new members have come during the pandemic. 6 million of those folks, I'm pleased to say, tend to be millennials and Gen Z folks. And you're asking, how is that possible? Credit unions are not for own democratically, that's little d, democratically controlled cooperatives. You join a credit union, you become a member, you get to vote on governance, you get to share in their success, meaning at the end of a year, when a credit union has had a good year, they're able to share those proceeds with the members. That means that you may wake up one day and have an extra $200 or $300 in your account. What we're finding with the younger people, again, the Gen Zs and the millennials, credit unions are mission driven. The whole ethos of the credit union system is people helping people. And they see that, they being the younger folks, as you know, a lot of our younger generation, they are very civic minded, they're very purpose driven. And credit unions tend to align with a lot of their values around service to the underserved, the financial literacy, the financial education, the commitment to serving marginalized communities. So a number of the individuals are coming to credit unions again because the purpose-driven nature of them. Also, there are credit unions that are unique in that they serve university communities. I just spoke at an educational conference, and these are the conferences that comprise of like Michigan State, Purdue, Notre Dame. If I haven't named your credit union that's also a college, forgive me. But the point is, a number of the young folks are coming to the credit unions because their universities have them as a part of the network. I just spoke near where I live in DC at the Georgetown Credit Union. They just celebrated their 40th anniversary. Kind of sad that they remember having me speak at their 25th anniversary, where they were able to show pictures of what I may have looked like then versus today. And it was really, the results were staggering. But be that as it may, the university communities are letting folks join. But again, purpose-driven institutions tend to attract, I think, that younger generation of members.
Yeah, that's really exciting. And just maybe thinking about the employment side of it, do you see any kind of key elements? I know, if I'm not mistaken, recently you had made mention of the importance of having a strong DEI strategy and commitment to, to basically attract new workers in the fold. Because obviously, as a country, we're still challenged in terms of trying to, fill critical roles and make sure that, kind of the employment needs are met, right? So I'm curious, when you think of it in terms of attracting employees and tracking top, performers, is that part of the process as well?
Neil, it's important because, to your point, help wanted signs are everywhere. We at NCUA, National Credit Union Administration, we're not immune from that. We have openings, and typically we would have a job opening and you would have it filled within weeks. At least you would have a lot of applicants. So we're having to be really creative in our approach to filling a lot of the vacancies. And you mentioned diversity. Diversity, equity, and inclusion are really important to us as we go about building a pipeline for the future, not only attracting talent, but retaining talent. And I want you all to know, Neil, that I look very expansively at DEI. I think that many of the times that folks read about it, they think that, oh, okay, there's board member Hood telling us we need to only look at ethnic minorities. Um, and I'm telling you, no, there's more to diversity, equity, and inclusion than looking at ethnic communities. Yes, I'm an African American, and that is a part of a DEI strategy. But what we're doing, we're looking very expansively, and I've encouraged our agency. We're looking at, are we going to rural communities? Are we going to tribal, indigenous communities for recruiting? And that we just put a new credit union charter together in a Native American area where they have a new credit union for financial inclusion. We're also looking at differently able, disabled populations. I put those individuals in our DEI equation. Justice involved individuals, people who may have had a nonviolent offense, but yet they've paid that debt to society. We need to look for opportunities to bring them into full gainful employment. In fact, we have a policy now that we are bringing in justice involved individuals into the credit union system. We have found ways that, again, you paid your debt to society. Let's look for opportunities to bring you into the credit union system for job opportunities. I mentioned differently abled, Neil, and disabled communities. We are now recruiting at places like Gallaudet University. Gallaudet is a college just in DC for the deaf and hard of hearing. They produce engineers, they produce technologists. So we have been hiring a number of individuals from Gallaudet to come and work with us at NCUA as examiners, and we're hoping that they will grow their careers here. It means, yes, we're having to provide interpreters around ASL, closed captioning, but at the end of the day, we're broadening that workforce because we've reached out to individuals that perhaps never thought of gainful employment from an agency such as NCUA. I've mentioned the tribal communities and the new credit union. And of course, that means if you're putting a new credit union in a tribal community, it means you're going to be hiring the folks from that indigenous community to work there. So those are just a few of the things that we are doing to broaden the whole aperture of DEI. And we're yielding some good results. And I can't wait to see others in the industry maybe adopt some of these activities. And Neil, I'd be remiss if I didn't mention NCUA will be hosting its fourth ever DEI Summit this November 1st and 2nd. When I became chairman in 2019, I launched our first ever summit where we talked about financial inclusion, technology, and I was blown away with the feedback because people said, we wish you had had it for longer than a day. They really thought it was that filled with content. So we will be doing our fourth summit this year, and I'm glad that our current chairman, Todd Harper, is continuing with that tradition. So for your listeners who may want to take part in it, it will be a virtual event or in person for those of you who want to come to DC, but that's the NCUA DEI Summit, November 1st and 2nd.
Oh, that's exciting. And glad to hear it's been so successful over the last few years. And I think that was a really enjoyable definition of DEI and broadening and stretching that out a little bit. So I appreciate you sharing with the listeners, because there's some things that you've included there that maybe, again, wouldn't be sort of in the typical narrow, version of that. So I think there's some really interesting stuff there. The example with Gallaudet is very, very cool. And I think that's just such a great thing. So, you've covered.
Well, Neil, that's mainly, Neil, because you hear about where I've been going lately. I was in Vermont. I was in New Hampshire. I'm about to go to Utah. And when I immediately talk to some of the groups that tend to not have a number of ethnic communities, and I talk about DEI, they think, oh, I can put my pen down now and stop taking notes because this doesn't pertain to us,
Right.
because we may not have a number of communities of color.
Sure.
So that's when I tell them, don't look at it through just that one lens
Right.
that's most often discussed. So that's why when I talk about differently abled, disabled, rural, tribal, justice involved, that's when they start taking notes again, because they recognize that those are all folks that are in some of those communities, the states that I've been visiting.
Excellent. No, that's great. Just a couple more questions for you, Rodney. First, you had mentioned that the NCUA has brought a new role in with the Director of Financial Technology and Access. That's Charles Weiss. Curious how the plans for that office are taking shape, and how Charles and his team are making an impact already in the work that you all are doing.
Well, he's been with us now just a few months. He started in January. So what he's doing now is he's putting together a business plan. He is interviewing and talking to industry stakeholders. The thing that makes him so strong at this is that he, having been the state regulator, he has a number of relationships already with the state regulatory bodies. And we probably should back up a second. NCUA, we are the federal regulator of federally chartered credit unions. We're also their insurer, but also there are state chartered credit unions that we don't regulate, but we insure. So we have a dual role in working with the state. So because he comes from that world, he is able to reach out to some of the states to hear how they're embracing technology, how we can all work together around bringing financial technology to the system. So he's going to be doing some road shows. I've also tasked him with, you may have heard me mention the Shark Tank event. I want him to partner with some of the venture capital firms that are providing resources to credit unions so we can sort of hear what are some of the folks doing. Maybe first Shark Tank could be around financial inclusion. Then maybe we can do one on faster payments, and then maybe one on digital identities. We're also looking at some tech sprints and some regulatory sandbox activities. He is going to be a great resource both for us here at NCUA, where if he's working with fintechs and hear that there may be regulatory impediments, but then how do we as NCUA board members address those regulatory impediments such that that fintech can serve the market? And again, it's about keeping credit unions safe, sound, and relevant. I also want him, Neil, not just to focus on the fintechs and credit unions, but also with NCUA as well, meaning how are we going to use what I would call a reg tech approach? Are we also using technology to help us with analyzing data? How do we perhaps use artificial intelligence and machine learning to look at the profiles of the 4,800 credit unions that we supervise? Right now, we get call report data, but it takes 3 months to scrub it. Let's see what can be done to get it in real time, instantaneous information. So we also are going to be looking at how do we modernize our regulatory and supervisory efforts as well. So it's a tall order. One of the things that's going on for the listeners is Charles Weiss is searching for a deputy director of the Office of Innovation. So please look at our NCUA website because that is another job. We don't want him to be going about this alone. We want him to have the tools and the resources to be successful. And Neil, I'll conclude with another piece. We at NCUA are among the other financial regulatory agencies in Washington that have a fintech office. The FDIC has one, the SEC, the OCC, Federal Reserve, CFPB. They've all had their offices. We, in fact, are the very last regulatory agency to create an office, and that for us was intentional. We wanted to learn from them, glean insight. So we have been now able to not only create our office, but to create one that's going to be both external serving and internal serving. And I've also tasked Charles with working in collaboration with some of the other financial regulatory fintech offices, because again, I don't look at this as competitive. What's my saying? A rising tide really does lift all boats.
Yeah, that's excellent, and I appreciate you breaking that down for us. And it sounds like there's some exciting times ahead, and also just hearing that there's a commitment there, obviously, to using technology to help you kind of serve that group better, right, and to be a better kind of patron of what you're trying to do from the start. So that's really interesting. I won't get into the whole AI piece because we've talked about that at length with some other folks, but I'm sure you have some opinions on that as well. I just, I see that as, an opportunity for good, right? And so hopefully
It is an opportunity for
we'll
good.
find a way to use that for good amongst all the things
Let's
that we're
tread
talking
lightly.
about.
We're going to tread lightly, Neil. You're right. AI, generative machine learning, all of those activities that, yes, if improperly used, they can wreak havoc. But if properly used, they can really stimulate and allow us to really move forward with using data and technology. And one of the first questions I asked the fintechs because I'm the one that launched that fintech series before Charles Weiss was hired, I always ask those fintech entrepreneurs, what are you doing that's making a difference? What solution are you providing? Are you making sure that your tool as a fintech is not exacerbating the issues that you're trying to solve? And I talk to them about this. So it's basically getting to what are some of the ethical use cases around artificial intelligence and machine learning. But you're right. I want to make sure that it is properly deployed. And that means that we need to make sure that we have safeguards in place. And another piece that I need to sort of balance my thirst and quest around financial technology with something that does keep me up at night, and that is cybersecurity. So I recognize that with the proliferation of fintech related activities, we do need to remain ever vigilant and mindful about battening down our defense mechanisms. We need to keep our credit union safe and sound. All it takes is one bad actor. So we want to make sure, are we deploying things such as multi-factor authentication? What are we doing around, again, safeguarding personal data, data privacy? So I just let folks know that while I'm zealous about technology, I also am zealous about making sure the safeguards are in place around cybersecurity and all the protocols that accompany it.
Yeah, that's an excellent point, and something that we've covered recently, even internally with some of our own folks. A lot of conversations happening around, how to improve those elements of cybersecurity in the credit union space. So definitely a good point. So my last question, Rodney, what's next for you this year? How are you finishing out the year strong? I mean, obviously you've got the DEI summit, but are there any other big events on the horizon or any other priorities that you're focused on to finish out 2023 here?
Well, as we finish out 2023, which is hard to believe that you've asked that, where has the
I
year
know, right?
gone,
Goes
Neil? It is
fast. It goes
flying.
fast.
I want to continue being that voice for the success and future of credit unions. My paramount responsibility is ensuring the safety and soundness of our regulated entities. So I want to continue just building upon the things we've discussed today, advancing sound and safe, sustainable home ownership, working with our credit unions to ensure that they know about the important role that financial technology can play, continuing to advocate around diversity, equity, and inclusion, but again, looking at it expansively. I was the first person of color to ever chair a banking regulatory body in Washington. And it's hard to believe that in 2023 that you've only had one person of color to ever chair. So because
Right.
of that, I had some unique experiences and perspectives. And that's why I've been able to really not only be a champion for DEI, but again, encouraging folks to look more broadly and expansively. So I'm going to continue on that threshold. But meanwhile, I'm just going to continue trying to be an informed, effective regulator. My philosophy is regulation needs to be effective and not excessive. And I just want to continue to serve as a public servant. I've been fortunate to have been able to be in several different administrations now, and I consider it a part of my North Star in being able to serve people. So I'm just delighted to be with you, and thank you for a great interview today.
Oh no, I appreciate it. I mean, you've done some amazing things, and you continue to be an advocate, and I think it's really impressive. We're happy to obviously have you on, and thank you for sharing your thoughts and your experiences related to both your professional journey, your background, as well as your role in the credit union industry as an advocate, as a regulator. I'm really confident that our listeners are going to enjoy this conversation. And of course, I'd encourage anyone who isn't already following Rodney to do so on LinkedIn and to keep up with him as he finds his way in the next article that'll be out there. I know there was one in the American Banker recently, and there's some other ones that are coming out. So I'm always keeping an eye out for some of your perspectives, in the trades as well. But otherwise, thank you so much for joining me. I hope you enjoyed it, and I hope we get to talk to you again soon, Rodney.
I hope so as well. Again, thank you. I've enjoyed my afternoon with you.
Awesome. Thank you so much, Rodney. We'll talk to you soon.
Thanks for listening to Firmer Ground from SRM. Please stay tuned for our upcoming podcast, and until then, you can visit us at srmcorp.com or on LinkedIn and Twitter.